Well, welcome everybody to this special edition of the Retirement Caddy. Joined today by a very special guest, my friend, and also the founder and Chief Investment Officer of Market Guard, Brad Jenkins. For those that may not know you, tell us a little bit about yourself and kind of what led you into this business and ultimately founding Market Guard.
Yeah, when I first got into this business, I actually entered in as an advisor. And as I surveyed the landscape of what was available to offer for our clients to put their life savings into, and that's the way that I've always viewed it, is it's not a portfolio, it's not an account, it's their life savings. This is something that they've taken whatever craft they did for their entire career or what they still were doing at that time and said, I want to trust somebody to help me and guide me through this process of the financial planning realm, because it can be confusing. It can be complicated. And so when I said, okay, great, I'm going to be able to help them. This is my training. This is my background. Now, what are the investment tools we get to utilize? And I'll be honest with you, as I looked at them, I'm like, these are garbage. I wouldn't even put my own money into these things. And so as I started to look at this, I'm like, okay, that's a no. Maybe so, but still not something I placed my money into. That was sort of my aha moment, and where I said, okay, we need to create a better way to do this. So I started with the blueprint of what would I put my own money into? And that's exactly what I did. Was I created these portfolios that were only available for myself and friends and family. Then over a period of time, I rolled them out to just the clients within my office. And I said, hey, this is what I built. This is what I've been doing. It's tested through the 08s, the 09s, the 2011s, the 2015s, you name it. And then I said, is this something, if it's available, if you'd like to put your money into it? Every single one of our clients shifted over to the Market Guard portfolios. We now said, we can't keep something this good under a rock. And this is where we created strategic partnerships and said, whoever's utilizing this for their clients, I want to be able to know them personally. I want to know the advisor to make sure that they are truly of the highest ethical and moral standard, because the three things that we built Market Guard off of, there's three pillars: excellence, integrity, and innovation. And I want to make sure that whoever wants to come alongside and we partner with them, and those individuals like yourself who are helping people who are before retirement or in retirement, that they also exert excellence, integrity, and innovation.
And there's no shortage of investment companies and solutions that are out there. What was the problem that you were trying to solve for the investor?
So what we wanted to do is we wanted to say, we know we can produce the results, but let's do it with less volatility. It's literally this algorithm. It's this AI, it's this machine learning, this algorithmic systematic approach that has total transparency, right? Not just what we're doing, but why we're doing it. You start to compound all those different things, and you have a very successful recipe for people that they can see what's happening. They can understand what's happening. They have great conversations with their advisors. They know it's non-emotional, methodical, mathematical. It's not some guy hoping he makes the right decision. And again, you start putting all that together, mix it up, you get a great outcome and a great recipe.
Fast forward all these years from once you started Market Guard to today, the market's been on a pretty good run. It's a time when naturally investors and people are maybe getting a little bit more comfortable than they should be in their portfolios and in how they're invested. What does that tell you about the need for a solution like this?
What it makes me think of is one of my favorite quotes. And it's from Warren Buffett. And he said, Noah built the ark before it started raining. And that's another thing that I feel like we keep very close in our awareness. A lot of times we see that people will make investment decisions based upon what they think should be happening versus what is happening. We want to have a solution that the clients are capturing the results when the markets are going up, regardless of if we think it should be or not. The reality is it is. So let's capture those. But let's be ready, just like Noah and his family, to say, hey, the rains are starting to come. The floodwaters are rising. Now is not the time to go get the wood, the hammer, the boat, and the nails. What we want to do is we just want to get inside and close the door. It took decades for him to build that boat. But when the time came, all he had to do was invite his family in, close the door, and they were safe. And that is one of the concepts we believe we've helped to create with Market Guard, is to say, we're going to capture the times when they're strong, but as soon as they turn on a dime, we can shift, close the door, and we've got that ability to say we've created every opportunity to help protect the best we possibly can.
So what I hear from you, like philosophically, when I think about all of this, is it's more about preparation than predicting. trying to predict whether or not the market's going to go up and down. It's having a prepared strategy and being ready for whatever the future brings.
Yeah, that's spot on, because market guard is not about trying to time the markets. Again, I feel like the industry has just gotten it wrong for so long. And a lot of times because of greed by the industry. They're thinking, how can we build a product that makes us a bunch of money, not the person who's putting their life savings into it? I talk to people about this all the time. I love to pull up charts and graphs, and I love them to see that line that goes up and down, up and down, up and down. And over this 10, 20-year period of time, it's this great result. And I say, do you see that line in the paper? They go, yes. I go, you'll never be that line. You won't get it. I go, well, what are you talking about? If I put my money in there, yes, I will. No, you won't. And I go, without a plan in place, without a strategy, without a methodology that began at the point of conversation to say, what can you handle inside there? What temperature of the investment realm do you need to be in? If you're thinking about like baking something, right? Mm-hmm. What does your temperature need to be set at? What does your time need to be set at? If you don't understand that, then what happens is, soon as those dips happen, because they will, if it's too much for you, you pop, you're out, you're gone.
We tell clients all the time, there's no one size fits all plan. When you're designing a portfolio or a plan, what are some of the things that are most important to you that is exposed inside of a plan? Or really, what are the things that are most important to the investor that need to be reflected in that?
I think that the individuality is really important for us to understand. I love cookie analogies. And it actually came one time when I was sitting down with my kids baking cookies, my two daughters. They were little and they said, Dad, we want to make little grandma's chocolate chip cookies. Now we called her little grandma. So I had little grandma and grandpa, big grandma and grandpa, and you can understand why. One were little, one was big, right? Yep. So little grandma owned a delicatessen in Pacific Beach, California in the 50s. And she had the most amazing recipes. And one of them was her chocolate chip cookie recipe. So my kids wanted to bake those. If I'm getting those ingredients together, my daughter said, all right, Dad, go get the vanilla. But instead I come back with vinegar. They're going to say, well, you can't use vinegar. And if I go, well, why not? Because vanilla and vinegar both start with the letter V. They're both a liquid. You use them in different recipes. I love vinegar, so I want vinegar in my cookies. They're going to say, Dad, even with all that justification, it does not matter that you want to put vinegar in there because it's going to conflict with the ingredients. So you have to get the ingredients right. Now, that's where I see a lot of mistakes. People think, I bought the right stuff, but this is where we understand it's a unique experience for every investor. And it's the third component of the analogy. If my daughter said, okay, Dad, here's the cookie sheet. All the ingredients are right. All the mixture is right. They're balled up, spaced out on this thing perfectly. You have one job. All you have to do is bake the cookies. You can't mess that part up, right? The answer is absolutely I can, because I have to know two things, time and temperature. If I get either one of those wrong, we risk those cookies from burning. If we get that wrong in our investment solutions and portfolios, the client risks burning their portfolio or getting burned in the markets. So having the ability to say, yes, we believe security selection, asset allocation, well, now to make sure the client experiences the line on the chart, we have to know the time and temperature at which that individual with that specific account, specific tax qualification, specific type of result they're looking for is unique to them, and they can set that dial on their oven. So you put all that together, and that is what we think of when we're building solutions at Market Guard.
Time and temperature, things we always need to be thinking about, and it's different relative to the markets and in retirement and our financial life. You know, people have to fight things like taxes and inflation and volatility and all those different conditions. And Brad, you know that I love golf, and every golfer learns you don't fight the wind, you play the conditions. And I think a lot of retirement planning feels the same way. All those different things that I just rattled off, I call those the blind spots, you know, the volatility, inflation, taxes, healthcare invasions, things of that nature. Those are headwinds that people face in their lives. And how do you think that retirees should think about navigating those conditions today?
I would put a lot of that back on the financial planning side, because teaming up with the right financial advisor, it's invaluable. Think about how fast life changes, how fast the markets change, and headlines. I mean, I feel like, you know, for the last 5 to 7 years, we wake up and it's a new headline. Yep. The markets are moving so fast, the economy is moving so fast that you have to be able to adapt quickly. Now, I think that it happens at two levels. One, it does need to be happening inside the investment portfolios, and that's what we believe we have covered at Market Guard. And you partner that with a strong financial advisor. And I'm going to really emphasize a strong, well-educated financial advisor, because a lot of people can say they're a financial advisor. A lot of them love to use the F word, fiduciary, right? Because that was the big buzzword. I'm a fiduciary, fiduciary,
Yeah.
fiduciary. And you're like, okay, but do you actually know how to do your job? If you can find someone in simple terms that knows how to do their job, this is the reason why I partner with you, right? Because I know you know how to do your job. I know how to do my job. So together, let's go out there and help change people's lives for the better, right?
Yep.
So those pieces coming together, to me, that is the Tiger Woods and his caddy. And it's a thing of beauty that most people go out there and they just hack away. A lot of advisors, right? I'm a professional golfer, and it's just hack, hack, hack. And they're putting up 120 on their scorecard where you're like, yeah, we went 21 under. How do we do that? Because we're both professionals at what we do, and we combine together as a team.
What you just said, it spoke to me big time, because it all comes down to planning everything in preparation. When Tiger Woods and whoever his caddy was at the time would approach a tournament, they weren't going in blind, haphazardly, willy-nilly. They had a plan for every single hole. They knew where they were going to hit the tee shot. They anticipated where the pins were going to be, and they knew how the greens were going to undulate to different areas, and they understood what the weather was going to look like. They didn't go into it blind. They went into it with a plan. And I think that's what this is all about. It's all about planning.
And that's where I think that a lot of times, because I've had so many conversations over the years, and this is just being completely frank and honest, I've had a lot of conversations where the client might say, well, why do I need to pay a financial advisor? Because it's so much more than just the investment. It's both of those pieces together. Imagine if a pro player went out there and said, why do I need a caddy? I don't need somebody, because you need somebody who is just out there knowing, again, wind, direction, temperature, the grass, what kind of grass, how's it going to roll, where is it going to break? Without that, I mean, you might do okay. But if you're saying, no, I want the highest probability of success to create the most amount of success for me, my family, for everything that I work so hard for, my life savings, right? What player is going to dedicate every aspect of their life to something and then go out there and say, well, I'm going to put myself in a 50% probability of this working out for me? No, you put yourself in the highest probability. So absolutely partner with an amazing financial advisor who has access to amazing investment solutions. And that's where I think you got the winning recipe.
Absolutely. And you said something early on about how, reducing volatility is a huge goal in the process and what you're trying to do. And if you think about it, I believe that's what a great financial advisor and a great plan bring to somebody is we're more valuable to the investor in a down market than in an up market. Think about everything that you've been through, Brad, just in your career. You've got the tech bubble, you've got the global financial crisis, COVID, inflation. Looking back, and I'm going to give this to you as the final question. What's one lesson you've learned through all of that every investor should remember?
Hiring a good financial advisor who has access, or a great financial advisor who has access to great investment solutions. That's probably the biggest. But if I'm looking at just from the investment side, I would say the biggest tip I can give somebody is using a disciplined approach that doesn't put you where you get out over your skis. And let me use an example. What's been the craze for the last 3 to 5 years? This Mag 7 and top 10, right? Everyone wants the Mag 7, the Mag 7, the Mag 7. Those are the big 7 stocks that are pushing the markets. So here's the challenge. When we see that, and also if they're just chasing the S&P, right? Someone chases those Mag 7s, they don't realize how much risk they're really incorporating inside the portfolio. They just hear about their friends, their coworkers, or whomever, Uncle Bob at the barbecue, who says how much money he's made. And you're like, there's more to it than that. If you're just chasing the S&P, think about it like this. What used to be this very kind of like centralized tower of companies, or a wide base, and the riskier ones got smaller on top, we have seen that invert. So for those of you who are listening to the show, take this picture in mind. When you were a kid, just about every kid out there at some point built something, right? So imagine you have your building blocks and you're building a tower. You always started with a wide base, and it had to get skinnier as you went up, or it was going to fall over. What we have seen over these last 7 years, in our opinion, because of the top heaviness of those Mag 7s, top 10 companies, they're carrying so much weight in the S&P 500 that's created this almost V-shaped tower. The top has expanded and it's just wobbling up here, right? And so the risk is people are operating the way that things used to work 20, 30 years ago, and they don't realize that the rules changed. And especially once they go from pre-retire to retire, that in and of itself changes the rule book. And so they have to understand that, and they have to understand, don't chase these false indexes, don't chase these false portfolios. And just because it works for somebody else and they say it's great, it doesn't mean it's great for you, because that's where that piece of volatility comes in. And that's what makes the job so difficult when there's a loss that sometimes is insurmountable, that no matter what you do to recover, it's just about stopping the bleeding, not fully healing from it. So don't ever let that happen. Don't put yourself out over your skis. Don't chase these things. Sit down with that financial advisor. Make sure they have access to great solutions like Market Guard, and then put that expected return with the amount of volatility, with the entire financial plan in place. And again, that's where I think you have the highest probability of success.
So one of the things I'm most excited about for an evening with Medalist and Market Guard in October is that in the room are going to be so many of our trusted client families that are already utilizing Market Guard inside of their portfolios. So to be able to hear from the brains behind the organization, the chief investment officer and the founder of this unemotional, mathematical, methodical, disciplined strategy that's been driving the foundation of so many portfolios is going to be just an incredible and special evening that we can share together.
Yeah, I'm excited, Matt, to join you and your clients out there, because for me, there's no greater thrill than being able to look the individual in the eyes that's utilizing Market Guard with their life savings. It's one thing for us when we sit in the office and we look at all the numbers and the charts and the graphs and the screens, but to see that manifest and come to life where it's making a difference in someone's hard-earned life savings, there's no greater joy. So I'm so looking forward to having that opportunity.